Joining me today for this week's first edition of Targets in Focus is FX Fundamentals Manager Tony Nyman from Informa Global Markets in London. Tony, let's start with a euro cross, euro pound. We've got the UK's tough austerity measures versus debt-ridden Eurozone member states, the source of the European sovereign debt crisis. I understand you're expecting further downward pressure on the euro pound in the mid to long term.
Well, should I start off, Rowena, by giving you our forecast? 1 month we have 84. 3 months and the 6 months 83.50 and 12 months 78.50. So as you correctly say, we're fairly steady at the moment. We don't think there's going to be huge moves at the moment, but recently euro sterling has been heading higher. We think the catalyst for late recent strength and a possible range break through 84 in the last couple of days has been the Moody's downgrade of the UK outlook to negative from stable. And obviously the post-Greek €130 billion bailout relief rally for the euro. So the euro, we believe, will stay relatively broadly bid until the second LTRO at the end of the month. Then, however, we do not expect this relative bid to last into the medium term, as you say.
The level of the euro Swissy is always one to keep a close eye on, since the Swiss National Bank has been working against the value of the Swiss franc. Now, the euro Swissy floor at 120 has been in place for nearly 6 months already. However, should the pair fall too much, they've said they won't hesitate to intervene again. Now, in terms of dollar Swiss franc, over the coming 12 months, are you forecasting any surprise moves by the S&B? And as a result, how are your projections shaping up for dollar Swissy?
Well, we see the 1, the 3, the 6 and the 12 months, 91.50, 93, 97 and 102. We are relative dollar bulls, and that's on the likelihood of ongoing resilience in the US economy. And we also believe there might not yet be a need for QE3 in the US. But as you say, the euro Swiss floor at 120 has obviously impacted hugely on the market. But we believe that underlying demand for the Swiss hasn't changed. It remains a safe haven, and I think what we've seen in the dollar Swiss, which has come off quite sharply over the last few weeks, is that demand for the Swiss. SMB's Jordan, who isn't quite the full-time head yet, but we expect him to be the president of the central bank going forward, he's refused to rule out the possibility of negative interest rates in the country, as the central bank considers every instrument available to stem Swissy strength. We believe, although it's fallen towards 120, he's been fairly successful in dealing with Swiss strength as far as it can do. And as you say, there could be surprises ahead, and we believe that the Swiss isn't going to go that much higher.
Well, today the Aussie dollar was little moved by the news of a clear victory for Prime Minister Julia Gillard after leadership vote against rival Kevin Rudd. Now, one thing markets will be paying close attention to this week, as you rightly said, is the ECB's LTRO. What kind of movement are you expecting from the Aussie dollar US dollar this week as a result? And looking further forward, what are your short, mid and long-term projections for this pair?
We believe the LTRO will be a euro positive very near term. We haven't quite had that 135 break in euro, but we might get it into and just after the LTRO. Then a few weeks later, then we think people will reconsider and maybe come off on more negative sentiment. So we think, as a result, the Aussie should stay relatively firm. The 1 and 3, 6, 12 months Aussie forecasts we have 105, 103, 102.50 and 99. That's obviously relative strength still, but we see it medium term, longer term, lower. You can't help but be impressed with the resilience of the Aussie right now, that's for sure. Growth and yield differential support so positively compared to other G20 nations and the rest of the developed world, while foreign demand for all things, Australian commodities, natural resources continue to prop the currency. But we do feel there are potential risks and weights ahead for the Aussie, including the Chinese slowdown, and that should impact on RBA policy ahead.
Thank you very much, Tony, for your latest projections. It was great to speak to you again. Now, DukascopyTV will be providing you with all the latest market news and exclusive TV interviews throughout the week, so make sure you stay tuned. But for now, goodbye.